One of my favorite sayings in investing is when in doubt, zoom out. And in today's video, this is exactly what we're going to be doing, taking a detailed look at not only the short-term price action, but the macro price action as well. Before the end of the video, you'll have a comprehensive understanding of not only what to expect next, the key levels that you should be paying attention to, but how the price action is developing, moving into the expected bull run. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel, guys. Thank you so much for tuning in. I hope you're all having a fantastic start to your week. In today's video, we're going to be discussing Bitcoin from a short-term and a macro perspective. We have so many charts to go over, so let's go ahead and discuss what we're going to be speaking about. We're going to take a look at the short-term price action in explicit detail, talking about the key levels that you need to be paying attention to, what the price action is currently doing, and how the price is developing from a technical perspective. We'll also be going over the macro data, discussing why Bitcoin has not even entered that parabolic phase of the cycle yet, and exactly what we are watching out for us to enter that level. We'll also be discussing a particular exit strategy I will be using potentially to sell my bags at the end of the cycle, and we'll also be going over the total cryptocurrency market cap in regards to Bitcoin's performance and how altcoins are currently performing and what we expect altcoins to perform like provided we continue along the current trajectories of the cycle. So we have so much to discuss today, guys. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to group chats, general chat, trading chart, and education chat, news, trade setup, daily video, and help chat. If you're interested in getting access to all of that, go ahead and contact me in the pinned comment of the free channel. For more information, click those links. Let's dive in. So starting on the price action and the market data. In the last 24 hours, guys, we have seen a fair amount of volatility. Again, Bitcoin did see a correction down to the 66K region. The 66K region, of course, was the weekly closing price of the prior 2021 all-time high. You can see a nice strong bounce from that level, as we discussed was likely in yesterday's video, as we did see some bearish exhaustion develop on the short term, as per two things. We had rising momentum, which indicated potential bearish exhaustion, as we did have a bullish divergence developing, and we had a bullish structure, which was the falling wedge pattern. And the falling wedge pattern is a visible representation of actions or inactions between buyers and sellers over a particular period of time. It is a reflection of exhausting from the selling perspective, okay? When we look at market patterns, it's very important to understand market patterns aren't just lines drawn. They're visible representations of what buyers and sellers are doing over a particular period of time. So like we just said, when we do see a falling wedge, it is not a falling wedge and a falling wedge is bullish. It is bullish because what it represents, and it represents that we are seeing exhaustion from the sellers over a period of time. So again, we have seen a recent breakout from that level, and we're discussing that in more detail today. Moving on from there, guys, let's go over to the market data. The market data 24-hour volume is down 10%. Sitting at 206 billion, still relatively high. 24-hour liquidations, again, still relatively high at 274 million, down 40% over the last 24 hours. We can see a very even cut between longs and short positions, descriptive of, again, the amount of volatility and chop we are seeing in the market on the short term. A lot of people entering late shorts as Bitcoin retested this area of support. A lot of people now getting liquidated on those positions. Moving over to the broader market, so DXY is looking basically exactly the same as yesterday. We can see the annotations we have in the chart over here. of our major uptrend that we had broken down. We are now in a short-term downtrend as per this black line. We are going to continue in a downtrend to retest our prior yearly low, provided this black line acts as a resistance. If we break above this black line, we could see a reversal in the short term for a continuation to prior highs. Overall, in a downtrend right now, that is all that matters. Moving over to the S&P 500, we can see again annotations on the chart. We can see we did come up to push to around 5,250. Again, while we remain above our key area of support at 5,000, we are expecting a upward move on the macro price action. It is only if we lose 5,000 that we would see a correction to retest our prior all-time highs. Again, don't get caught up on the short term too much. Look and zoom out. If we do lose this level, that is when we're going to be flipping our bias bearish. Until then, any correction should be healthy. Moving over to the Dow Jones, exactly the same thing over here, guys. Again, we have our short-term support trigger at 39,000. While we remain above that level, which we are currently doing, we are very, very bullish for a continuation to 40,000. Moving toward the downside, if 39,000 breaks, we could see a correction to retest our 38k support, and only if 38k support is lost, would we see a higher time frame correction to retest our prior all-time high. Again, even if this does happen, it will still be macro bullish. So overall, looking very, very good. Now, before we get into Bitcoin, one more thing to discuss. We do have, again, the Federal Reserve interest rate decision coming out very, very soon. This is in less than 3 days' time. If you want to find out more about what I think about what's going to happen, and you want to learn about what impact the decision could potentially have on the market, go to the Telegram channel. Again, a free Telegram channel, link down below. Read the most recent message. I did a whole post discussing exactly what the Federal Reserve interest rates means in regards to impacting the future perceived systematic risk of market participants and thus the asset market as a whole. So go ahead and check it out. Let's go ahead and jump over to Bitcoin. Before we do, a quick word from Bitget and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump over to Bitcoin. So starting on the shorter time frame price action, let's take a look at what is happening. Let's talk about what happened and let's talk about what to expect next. And then we'll zoom out to the macro on the monthly, and then we'll finally finish up on that total cryptocurrency market cap discussing altcoins. So let's start on the short term. So as we've said a few minutes ago in the intro, Bitcoin saw some pretty decent bearish exhaustion. Again, if you didn't pick up on the bearish exhaustion, what we did notice was we saw falling price action as per this black line. And with that falling price action, we saw we had rising momentum. So rising momentum against falling price action is again a bullish divergence. This indicates that the price action is beginning to show signs of bearish exhaustion. Now, price action and price itself can sometimes be deceiving. It is very important to validate the price action with strength. And that's why we look for breakout confirmations, or we look for reversals. We are more specifically focusing on what are the leading indicators, such as momentum, telling us about what the buyers and sellers are doing at any particular time, so we can gauge the potential strength developing and thus gauge any sort of reversal that can develop. From this point, we did see again with this structure, we had a falling wedge pattern. A falling wedge pattern is a bullish pattern. We did see with the breakout of this falling wedge, we as well had a breakout of that short-term RSI trend line. Again, the short-term RSI trend line was representative of the momentum developing within this period. So we're breaking it down. We see local high retest of this wedge. We had an equal local high retest of the RSI. the second retest of the wedge over here, we had a equal retest on the RSI. So we now know not only did we have a relevant downtrend as we had again 3 points of contention, but we also had a relevant trend in the overall momentum. Within this cluster of price action, which we've gone ahead and blocked out, you can see the momentum was falling. Therefore, we were waiting for two things, a break of the downtrend and of course the momentum flip positive. We saw both those things. At the moment, Bitcoin is now in a short-term uptrend, and with that, we have seen the market rebound a little bit. Looking forward, if we take a measured move of the wedge, we take point number 1, we drag to point number 2 being the first retest of the lower side. We apply that to the projected breakout point, and that will give us a measured move range of a potential target to around 73,000 to 74,000. Now, it is very important to understand measured move targets are not price targets. They simply represent a range of price action that could result as from the breakout of a prior structure. If we look for price targets, we have to look for liquidity levels and areas of resistance. Like we said already, we look for this range over here, particularly the price range between 68,500 to 69,000 as a first target. We can see the price action has reached that level. A break above 69,000 will likely push the price action to reach this divot in the VIPV, this crescent over here at around 70,000 for a next target. Then we're looking for peaks, 72,000, and then we're looking for these high levels at 73. So we do still have a major area of resistance to clear before we would expect that large continuation upwards on the short term. 69,000 is equally as strong as a resistance as 66,000 is equally as strong as a support. So this resistance we are testing now is just as strong as the support we have retested in the past. Zooming to the macro chart, you can see that the 66k support is the weekly closing price of the all-time high in 2020, and 69k resistance is the all-time high, the highest the price reached. So we are still moving within this area of higher time frame resistance, and thus we are definitely not out of the woods for a rejection and downtrend yet. However, on the short term, we are looking good. So with that in mind, if we do break above 69,000, that is the trigger for a continuation upwards. If we break above 69,000 in the short term, it increases the probability for a weekly candle close above this level next week, and it also increases the probability for a monthly candle close, which we'll be discussing in just a moment. On the short term, guys, everything we discussed yesterday for the bearish scenario plays intact. For the bears to take control again, we need to drop below the sell side liquidity of the lowest point of the falling wedge, which is 64,551. A loss of that level will result in a continuation down to 62k, which is our VIPV peak, and potentially 60,000. Of course, 60,000 is the major area of support that if we are losing, we would see a steep correction to 58 or 52. However, remember, the downside scenario is much less likely than the upside scenario while the 60k area holds as support. I'll say it one more time. The downside scenario is much less likely than the upside scenario while 60k holds as support. Let's go ahead, guys, and jump over to the macro chart. So jumping over to the macro charts over here, we can see two things, and there's two things I want to discuss. Number one, when will Bitcoin top? When's the best time to sell? Yada, 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 roughly. And number two, have we seen that parabolic phase? And if so, what do we need to see for that parabolic phase to trigger like we've seen in prior cycles? So if we look at the price action and we look at prior cycles, what we can notice is generally when we break above the prior all-time high and close a monthly candle above that level, we generally see that large explosion in price action. So I just lost my pen over there. We can see a monthly candle closed above the prior all-time high. We saw that large explosion to the next all-time high. A monthly candle above the all-time high, large explosion to the next all-time high. So we're going to assume that number one, validation number one, to see that parabolic phase of the cycle, that phase where everything goes up aggressively, we need to see a monthly close above 69,000. The monthly candle is in 14 days time. Alongside that, we also need to see, with the monthly candle close, strength on the macro validate, meaning we would need to see the RSI break over the 80 point at the time of which the price action monthly closes over 69k. If we look at prior price action, we can see the RSI broke over the 80 point at the same time the price action broke above the prior all-time high, resulting in a strong move upwards. If we look at the last cycle, the RSI breaks over the 80 point on the candle of which the price action breaks through that all-time high, resulting in an explosion in price action. So we are looking for a similar thing this time. We are looking for the candle to break with the RSI over the 80 point, resulting in what we have seen in the past. Now, if we apply a date range trend to this, and this is a lot of things, guys. We're going to see a lot of people on the internet talking about potential top targets of Bitcoin. We're going to see a lot of people on the internet telling you 400,000 is possible. We're going to see a lot of people on the internet try to tell you these specific prices are possible. Remember, prices are irrelevant. The price of the asset doesn't determine where the asset goes. It is very important when you're looking to sell at the top, wherever it may be, you are basing your decision more so on data rather than a magical number that you've got attached to yourself emotionally, because you'll be a billionaire by the time that number is hit. The number is irrelevant. Focus on data. So what I personally look for is high time frame shifts in momentum or potential exhaustion developing on the macro chart to tell me that we are potentially seeing a reversal developing on the price action. It's very hard to project that on a monthly chart. We look at weekly charts specifically, but there is a good pattern we have recognized in the prior cycles that could give us a potential date range of where we would expect that exhaustion to develop, and a strategy you can use to potentially exit when that occurs that I will personally be using as of right now. Again, that may change in the future depending on how the price action develops. If we look at the date range, okay, from the point of which the RSI breaks on the 80, okay, to the all-time high. So you can see on the RSI, 10 bars. That is the point at which the RSI broke out on the 80 to the all-time high in the price action. It is 10 bars. Okay, we do the next cycle. The point at which we broke out on the 80 to the all-time high, that is going to be 8 bars. And then we do the next cycle. The point at which we broke out on the 80 to the all-time high, that is going to be 8 bars. So sorry, this one's actually 7 bars. And 10 bars. So we have 10, 7, and 10. So if we apply this theory going forward, we can generally expect a top in the price action around 7 to 10 bars after the RSI has broken on the 80. So wherever the RSI breaks on the 80, I will count 7 to 10 bars. Okay, 7 to 10 bars. And between the 7th month and the 10th month, that 3-month window is where we would expect the top to occur for Bitcoin according to what we have seen in prior cycles. And therefore, within that 3-month window, that is where I'll be selling percentages of my positions every single week leading up to the expected top. Now, it's very hard to project exactly when the top will be, so it is always better to sell moving into the top rather to wait for the top and then sell leading away from the top. Okay, selling moving into rising price action is always going to be better for your emotions and risk management than selling after the price action is topped. You're going to get a better average sell price. Your goal is not to sell the exact top. Your goal is to sell as close to it, and by the time it is at the exact top, you're hopefully the majority out of your position by that specific time, okay? If you're trying to sell on one specific number, you're making your life very, very difficult. To sell on one specific number is a very, very big task, emotionally and psychologically, as all or nothing stakes on that number. You'll become a deer in the headlight, unable to make a decision, and you'll end up holding your positions down, okay? Just as you ladder in, you ladder out. So that is what we're looking for on this chart. Let's go over to this chart now. And this is going to be on our left, we have Bitcoin, okay, BTC. On our right, we have the total 3. For those of you who don't know who that is, the total 3 is essentially the total cryptocurrency market cap, but focused primarily on altcoins. So it doesn't include, Bitcoin and all that kind of stuff. So if we're looking at the price action, we're looking at similar patterns. What we do notice is, number one, we have our all-time highs, okay? But I want you to focus on this vertical green line. The vertical green line on both charts is exactly the same date. So the 7th of December 2020 is the vertical green line on both charts. What we're specifically looking at is the position of which Bitcoin was in at that date in comparison to where altcoins were in at that date, and how that matches where we are at in the current cycle. So as we can see, on the 7th of December 2020, we saw Bitcoin break above the prior all-time high. Perfect. We are seeing a very similar scenario here. We're seeing Bitcoin break above the current all-time high. Looking at altcoins at that date, we saw altcoins were underneath the dead cap bounce high of the prior cycle. Okay, they were sitting at this price point over here. If we look at the altcoin cycle this time around, we have the dead cap bounce high, okay, which is over here, of the prior cycle, and we are sitting underneath it in that range. So when we're looking at altcoins, we can say that according to historical price action, if we see a traditional cycle play out, and that could still be negated, but if we see a traditional play out, as per what we have seen before, the altcoin market has not yet seen that face melting parabolic phase as we have seen in prior cycles, and in fact the altcoin market is not lagging. It is exactly where it should be according to what we have seen in the 2020 bull market. The altcoin market was structurally in the same position as it is now when Bitcoin broke above the prior all-time high. This is fantastic news for your altcoin bags, as it does suggest there's plenty more upside provided Bitcoin is able to push forward, break above 69,000. We see that traditional bull market play out, and economically, we don't see anything that interferes with the current narratives which are driving a price action. Again, the current narratives discussed below in that Telegram post. It is very important that the narratives of which has been developed from early 2023 that have been pushing risk asset markets up, dropping perceived systematic risk, and increasing, okay, the prices of risk assets remain intact to facilitate a macro continuation in the asset markets. If we see shifts in those narratives, the narratives specifically being that potential future interest rate reductions, if we see shifts away from that narrative to new narratives, which will be potentially bearish narratives, we could see perceived systematic risk increase, okay, risk appetite decrease, and people adjust their portfolios according to the future potential risk in the market, which means they will sell off the positions and we'll see the market correct. Again, you have to understand how economic factors drive price action. If we do look at what drives price action, okay, buyers and sellers, of course, change the price of the asset, but what causes buyers and sellers to make decisions? We have a whole bunch of stuff. Economic monetary policies, okay? Taxation policies. We have stuff like societal perspectives, such as ETF news or publicity. There is a whole range of things, but most importantly, one of the major ones is, of course, interest rates, as interest rates control the cost of debt, and cost of debt controls spending, and spending determines where people put their money, and where people put their money determines where the markets move. So you have to understand this. Again, I have a background in economics, so it makes it a little bit easier, but if you don't, again, following my posts, listen to what I'm saying, I teach all this stuff in the videos and on the posts. Thank you for watching. Have a fantastic day. Check you on the next one. See you then.